Hi, we're here today looking at Chapter 2 for College Accounting, where we will analyze transactions into debit and credit parts. During Chapter 2, as we will do throughout the rest of the semester, we will use the business Techno Consulting to help us illustrate accounting concepts and procedures for a service business that is organized as a sole proprietorship. Techno Consulting is a service business that is set up for computers, and they will help to troubleshoot, network, and problem solve for a variety of clients. Techno Consulting rents its office space and equipment. We will learn about all the transactions that relate to a small sole proprietorship and all the accounting that goes into the whole process of accounting for this type of business. We will use the chart of accounts for this semester that is illustrated on page 3 of your textbook. I would recommend that you briefly look over the chart of accounts for Techno Consulting as demonstrated on page 3 of your accounting textbook. And if you'll notice, there are various sections to that chart of accounts. The chart of accounts relates to the balance sheet, assets, liabilities, and owner's equity, and then it also highlights something that we will learn about in a few weeks relating to the income statement and revenues and expenses. You will note in the chart of accounts that there is an owner's capital account and an owner's drawing account. You will note that there is no cost of goods sold section in this chart of accounts because Techno Consulting is a service business. We will learn about a cost of goods sold and inventory during the second semester of college accounting. You will also note on the chart of accounts that each account has a number associated with it, and we will also reference and learn about how the numbering methodology drives a company's accounting system. And items are categorized by account number. Now, to focus on the goals of Chapter 2, in Chapter 2 we will define accounting terms relating to analyzing transactions into debit and credit parts, identifying accounting practices relating to analyzing transactions into debit and credit parts. We will use TAccounts to help us analyze transactions, and we will analyze how transactions used to set up a business affect accounts, and we will analyze how transactions affect the owner's equity accounts. First, let's learn a little bit about what a T account is and how we can use it to analyze transactions. As we learned in Chapter 1, an account is a record summarizing all the information pertaining to a single account or single item in the accounting equation. Even though the effects of accounting transactions can be recorded using the accounting equation, as we did in Chapter 1, this is not really a practical approach. Therefore, businesses use a separate record for each account to note how changes in accounts are affected by transactions. They use what's called a T account to help analyze the impact of transactions on the affected accounts. So basically, the T account is an accounting device used to analyze transactions. Simply put, a T account can be broken down into its left side, which is always the debit side, and the right side of the T account, which is the credit side. Every single account in the accounting equation has its own T account, and every single account in the accounting equation has its own debit side and credit side. You can draw the accounting equation using a T account as illustrated above. Assets equal liabilities plus owner's equity. And we can see that assets are on the left side of the accounting equation, and liabilities and owner's equity are on the right side of the accounting equation. Every account in the accounting equation has its own left side and right side. Pardon me? The left side of the accounting equation, the left side of a T account is always the debit side, and the right side is always the credit side. The normal balance of an account is the side of the account that account increases on. Let me say that again. The normal balance side of a T account is the side of the account that account increases on. So, when we look at the accounting equation, we see that assets have their normal balance side on the debit side of the T account, whereas liabilities and owner's equity have their normal balance on the credit side of the T account. So, as you can see here, the accounting equation is broken down into assets equals liabilities plus owner's equity. All assets are on the left side of the accounting equation, and all assets have a normal balance on the debit side. All liabilities are on the right side of the accounting equation and have a normal balance on the credit side of the accounting equation, the credit side of the T account. Owner's capital, the owner's capital account also has a normal balance on the credit side of the T account. Let's talk about some rules for using T accounts. There are two basic rules for using T accounts. The first rule is that accounts increase on their normal balance side. The second rule is that accounts decrease on the opposite side of the normal balance side. So, as you can see here, in this giant T account model, assets are on the left side of the accounting equation. Therefore, their normal balance side is the debit side. So therefore, assets increase on their normal balance side, the debit side. They decrease on the credit side. Whereas liabilities, they are on the right side of the accounting equation. So therefore, their normal balance is on the credit side. So liabilities increase on the credit side. They decrease on the debit side. The owner's capital account is affected in a similar fashion to liabilities. The owner's capital account increases or has a normal balance of a credit, and it decreases on the debit side. If you'll recall from Chapter 1, when we were talking about transactions, you'll recall that every single transaction affects at least two different accounts. As we progress through this chapter, we will explore and analyze how the transactions can be reflected by debits and credits to the different accounts. Now, if you will proceed to the questions for the end of section 2.1, you will be emailed a link to the Google form, and you will answer these questions relating to T accounts. You will submit your responses by clicking on the appropriate link after you complete the questions. We will do in class the work together for 2.1 on page 31 and proceed to the application problems for this section of our notes. Thank you.